So last week, the Federal Reserve leaked a gigantic little secret that they don't want you to know about. We're talking about a $43.6 billion secret with a capital B. It's no secret that the Fed has been pretty hawkish on inflation. He has kept interest rates higher, of course, making your mortgage much more expensive, and continuing what's called quantitative tightening. And quantitative tightening, in layman's terms, is where he continues to deplete a lot of that money that was lent in during COVID times at very cheap rates. In other words, as it's paid off, he's not replenishing the dollars in the global economy. And because those dollars are not being replenished into the economy, there's less dollars out there to borrow, which then increases the cost to borrow those dollars. They've been doing this since 2022. We've also seen mortgage rates jump higher with the recent news on tariffs. As countries have liquidated their bond position, it has put upward pressure on yields. In other words, the US government needs to pay a higher interest rate in order to get people to lend them money. This, unfortunately, impacts the mortgage because the mortgage tends to follow the 10-year bond. And so as the bond rates increase, so do mortgage rates. And although in our most recent meeting with the Federal Reserve, he continued to be hawkish on inflation, continued to show no sign of budging on interest rates, secretly, without telling anybody, they made a purchase of $43.6 billion of US Treasuries and bonds in less than 4 days. That is a new massive buyer of US bonds in the market, and therefore putting more demand after US bonds, allowing the US government to pay less interest rate for those bonds. This, of course, trickles over into the mortgage market as well, putting downward pressure on mortgage rates. If you're a buyer and you've been sitting on the sideline this whole time, right now could be a magical time. We're seeing, hey, interest rates might be dropping very soon. And if you live in Houston, we have a surplus in inventory. That's right, we have more inventory than we did pre-pandemic, which means that more inventory means it's a little bit more of a buyer's market and you might be able to wheel a deal that you couldn't have before. Of course, the economy is super complicated. There's a lot of moving parts, but it's encouraging to see Fed make this pivotal pivot in their approach on policy for monetary policy, and it could mean cheaper rates. Keep your eye on the bond market and stay tuned for more updates.